So Grant, your second point.
All right, so this one seems to be the more logical one, Charlie. I'm going to put it out there, which is maybe checking out the financials. However, a lot of the time when a lot of us look to check out financials, we might look at a P&L, like a profit and loss, and go, yep, on paper, this thing's making a profit or it's making a loss and maybe I can turn it around the other way. But that's not the level of due diligence I'm talking about here. The level of due diligence I'm talking about is actually going like one layer deeper, I'll say, where what is the submissions that they have made to the government, Charlie, aka in Australia, the business activity statement, the BAS that we do every quarter. What about their yearly tax return for the business? What do the finances look like on that? Because as you and I both know, some of these things can be manipulated, especially if it's in Excel or Google Sheets. and then them sending us information and us going, do we rely on this completely? So for me, one of the key things is actually picking apart their financials based on what they submit to like a government or otherwise, and actually go, what does this look like? And then doing your typical review of trends, profit groupings, etc.
I don't think people know how manipulable books are.
I might be underplaying just how manipulable they are.
Yeah, so I think we really want to go deeper on this one because I suspect people listening to this have been caught out, and I've been caught out, to be honest, and I've also had a good save here. If someone gives you a P&L or a cash flow report or a balance sheet, right? If you were someone that knew you were going to sell your business, let's say a year ago, do you think you would have started doing things to make these documents look a certain way so you could get a certain price?
I might have removed employees before. I might have reduced advertising spend, aka not putting a team on backlinks and new content and all those things to increase profitability. I might have done those things in the past, Charlie.
I've heard stories of people have two companies and they'll employ someone in a different company to do work on the other company just to make it look more profitable. So when they sell the business, that it's like, look, we're making all this money, but really there's a staff member missing.
Have you ever seen a founder or a business owner not pay themselves from the books to make it look more profitable?
Completely. I've also seen businesses stop CapEx or reinvesting in a company so that they can look as profitable as they can. And you know what's interesting here? We're not even talking about like being sneaky and like, using an eraser over a number here. Because these things happen, right? The books are accurate to the events that have occurred, but someone's manipulated behavior behind the scenes.
Totally.
Then there's the whole cash-based versus accrual-based accounting.
That's the best. That's the best trick ever.
Yeah, what do you mean? I've got $4 million in contract value. I mean, I've only got 10 grand in cash, but it's like, look at all this profit that might come.
I swear there are SaaS companies that I know of that have used all of that to try and raise a lot of money, and successfully, very much successfully so.
I'll go one more out there because I want to be helpful on this, but more just drawing your awareness to like how manipulable books really are. Like financial reports can be manipulated in a big way across a variety of things, particularly when it comes to purchasing a business on this one. Now, if you wanted to validate or verify someone's books at a deeper level, you mentioned two good ones, which is like BAS, filed tax returns, a stat deck from an accountant could be a really good one as well. I would also ask for bank exports. I would want to see the actual transactions from the bank account or a Stripe account because those things you can't fake as easily. There's a deeper level of fraud someone would have to go to actually pull those things off. And then I'd also be asking for timelines. In a lot of cases, people don't get the books of a company far enough back. They might just get the current year or maybe a year before. And you have to be really mindful of things. As I said, it's like they could have just hidden employees or expenses in different companies and stuff like that. So all of that becomes really important here.
I love that. I love that point because one of the things I was going to mention was like the trend. Like, is profit going up? Is profit going down? Is sales going up? Sales going down? What about your operational expenses, your cost of goods sold, all those kind of points? The best way for you to get any understanding of how it is today is looking back. And I'm not talking about, to your point, I'm not talking about looking back over 1 month or 2 months or maybe a quarter, to go back years and have a look at the trends. Like, what is the story of the business? And at Focus HQ, we call it the story of a project. like from the start of a project until now, like 2 years later, when has it done really well? When has it not done very well? What has someone done to try and solve it? And it's the exact same here. It's like, what did the business owner do to make it really profitable? What did they do to increase sales? And how is it now looking based on what you're looking to purchase? And I think that the trend and those historical views actually tell you a lot. I've seen businesses that have had huge amounts of refunds in 1 month of the year, where if you're buying towards that 1 month, like you'd never see it if you looked over a 6-month trend, right? Like maybe like a Valentine's Day or a Christmas or something.
I can already feel the excitement of buying a business overtaking the idea of looking at these things properly. I can already see it. Can I share a story on this one?
No.
So at one point, Bianca and I were actually looking to buy a gym. There was a gym that came up for sale in the area we were living. Really nice, lovely lady who was running that gym. So she had prepared it for sale, and we asked for like the prospectus. So this is where they tell you about the business, they give you some financials and all the rest of it. Now they had quoted in the gym that they had about 200 and something members. So we were doing the maths and we're like, all right, if you've got 200 members and they're paying you this much a week, like this should be the revenue that comes into this business. And when we like reviewed the financials, that's not what was coming in. Like it was substantially less. And we asked for, we questioned that and asked for proof of the members and also the revenue associated with those members. And it was only, and this wasn't disclosed, right? She goes, yeah, we have 200 members or hearsay, but 75 of them are actually on pause.
That's brutal.
But to have not disclosed that in the upfront is like, they were very much hoping to get away with that and for us not to notice it in there. And then the question that really like put this deal was like, no chance this was happening. We asked, well, how long is your pause period? Because we thought they maybe, they allow, people go on holidays at Christmas. Maybe they do a 2-week pause. That's common in a lot of gyms.
Yep.
In this case there, it's undefined. So some people, actually half the people that have been on pause had been on pause for more than 6 months.
They ain't coming back. They are cancelled.
Completely. So this is a misrepresented business that then they had tried to cover up, and the financials and verifying the financials were the thing that prevented Bianca from making a huge mistake on that one.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into creating wealth inside and outside your business, check out the full episode by clicking the link on your screen or in the description right now.